You're watching Newsfeed. Let's give you the markets update now. The JSE may continue to trade weaker in early trade. This is amid U.S. recession concerns. The local markets closing in the red on Friday, led by losses in mining and retail sector stocks. The JSE All Share index declined 1.2%. Let's speak now to Simon Brown, JustOneLap founder, who joins us for a quick update on how the markets are faring this morning. Simon, thank you for your patience. Let's start with your overall markets update this morning. How are they faring?
So, Ollie, we actually started the day red, but in the last 15, 20 minutes, suddenly we've seen the market turn green. Asia was mostly red this morning, particularly Hong Kong. The exception there was Sydney, which was a little bit green, but we've certainly, as I said, come through strong in the last little bit. We're trading up almost a third on the overall market, led by industrials up almost 0.5%, resources and financials both green but lagging. We're also seeing commodities under pressure, most notably oil, which is good news for motorists. That's down at $80.68 a barrel for Brent. And we've seen the rand a little bit weaker as well. The dollar against the dollar 18.16. Against sterling, we're trading at 22.60, and against the euro, 19.94. So it certainly improved in the last little bit, and hopefully follows through for the rest of the day.
Yeah, let's talk about Credit Suisse, Simon. It says on Monday that it had $68 billion in net asset outflows in the first quarter, adding that these outflows were continuing even after the 167-year-old institution's state-owned engineered rescue by UBS. What's actually happening here?
Yeah, banking is so much about confidence. And if we go back to March, we had the Silicon Valley Bank ultimately collapse in the US. And that spread some contagion more to the second-tier banks across America. But at the same time, Credit Suisse was also sort of being under pressure. And truthfully, it's been a bank that has struggled for pretty much the last 2 decades. Concerns came up again late last year. And with the banking crisis in the US, very much concerns of how bad was it going to be? How bad was the contagion going to be? I mean, people on shore, they take the line of least resistance and they simply withdraw assets, be that perhaps as closing cash accounts or investments or the like. And 68 billion outflow is a giant number, and particularly when you think most of that would have happened in the last couple of weeks of March as that banking crisis was unfolding in the US. It's now largely moot, as you mentioned, is going to be that sort of forced merger between Credit Suisse and UBS, although really it's UBS taking over Credit Suisse. But it does show, a bank that's got 170 years can very suddenly lose confidence of the market, and that can end a bank in double quick time.
Let's then talk about the asset manager Corporation. It says it's expecting to report huge losses as a result of the costly tax case, and as a result of this, it's not going to be declaring a dividend for the 6 months, which ended on the 31st of March 2023. Talk us through their performance.
So we in a sense, we knew this was coming. We'd had the announcements during February around the problems that they had with SARS. Initially, they didn't quantify the number. Then they said around 700 to 900 million ZAR. They are going to appeal to the Constitutional Court. That's the process. They've got to get leave to appeal from the Supreme Court of Appeal, and then will the Constitutional Court hear it. So if that happens, it's going to happen next year. It's not this year, which does take a massive hit to the numbers. Also means no dividend, and typically Coronation is a very strong dividend payer. But if you take all of those one-offs out of the equation, it wasn't a bad set of numbers from Coronation. They managed to grow the assets under management, contrasting to Credit Suisse of a moment ago. So looking good there, earnings looking good. It really is that court case which has hurt them and taken them out. In an ideal world, it's a one-off. Maybe they win the case in the Constitutional Court. We'll know that in a year and a half's time.
Yeah. Let's conclude with South 32 publishing its quarterly report for March 2023. Help us make sense of their numbers.
So South 32 is an interesting company. It's commodities, but it's different commodities. It's manganese, it's nickel, it's aluminium, the Bayside, the smelter up in Richards Bay, and of course a lot of copper there. And broadly, they're keeping to their expectations, guidance for the year in terms of production and in terms of costs. But in this particular quarter, they had some challenges. Some of it to do with flooding, stoppage happening in Australia after an accident that resulted in the death of one of their staff members. So the market's taking a bit of a dim view. I have to say, I thought the market, perhaps being a little overly nasty towards the trading update, I didn't think it was particularly bad. And they're in a lot of the sort of commodities which are going to be important as we sort of move that just transition away from coal to renewable electric vehicles and the like. So I think a stock that's definitely worth watching, notwithstanding currently trading down just over 6% this morning.
JustOneLap founder Simon Brown, thank you very much for that markets update.